Hi everyone. I'm just going to give a few seconds for others to join. I can see the attendee numbers coming up on my screen, so I'll just give it a few more seconds and then we'll get going. Hi everyone. Welcome to IBA's webinar, All You Need to Know About Values in 2021. Phil Seymour here, Company President at IBA. Thanks for joining us today. Firstly, we'd like to send early Happy New Year to all our colleagues in China, wishing you all the luck for the year ahead. I believe it's the year of the ox. Wish you an enjoyable holiday period. So here we are, about to take a detailed look at IBA's value changes, the driving forces and justifications for these changes, plus a look at what to expect in 2021 across the sector, regional, narrow-body and wide-body aircraft. By the way, we will be holding specific freighter and engine updates in the coming months. We have had quite a few questions on those sectors. We will be following up with you. I'm joined today by Stuart Hatcher and Mike Yeomans to deliver that update. Both Stu and Mike hold the ISTAT Senior Appraiser accreditation. A quick reminder that we provide a range of services to support the industry, which we've been doing through the aviation cycle for 33 years now. So from valuations, technical asset management, advisory, data and analytics through our Insight IQ platform. If you're not familiar with the appraiser services, we have 6 ISTAT certified appraisers, 5 of which are senior category or above. We've been voted Appraiser of the Year twice in the last 3 years. We've carried out over 3,500 valuations in the last year, and we've been appointed to appraise the most significant top-tier lessors, ABS and WTC structures. We do differentiate ourselves amongst the main appraisal firms because we deal with asset management as a core task, so we do see real deals firsthand. Mike will provide a bit more data about that in his deck. Our ISTAT team is the powerhouse for our values module in our data intelligence platform, Insight IQ. In particular, I want to mention Insight IQ. It's our one-stop aviation intelligence platform combining speed, visual analytics, and intuitive navigation. Our data products have come a long way since the launch of the original IBA IQ, which had fleet and values data. So we continue to innovate and combine more data sources, analysis and insight with technology to provide clarity and solutions to meet your company's ambitions. We've recently added more macroeconomic data and events, historical values, and we'll soon be launching our carbon emission calculator. We have 18 slides to present to you today. That equates to around 45 minutes, and we'll provide at least 15 minutes to address questions. We've had many questions sent to us ahead of the session, and we'll either respond to those directly or have included the responses within the slide deck. Thanks for those questions, but there is an opportunity to ask more questions during the webinar. Please do ping them over via the questions link in your control panel, and we'll look to address those where we can. We have 2 polling questions to provide you with an opportunity to share your opinion and to gauge sentiment. We have about 1,400 people registered and a diverse spread ranging from the airline delegates, almost 200 of those, 750 from leasing and finance community, with OEM, MRO, law firms and other accounting and audit professionals taking part as well. Before we get to the main deck, I'm going to kick off with the first polling question. So just give me a second. I do have to adjust my screen. Apologies. In general, aircraft values will bounce back in 2021, stabilize at current levels through 2021, recovery in 2022, or fall further in 2021 and stabilize in 2022 and continue to decline through 2021 and 2022. Of course, you may vote for whatever you like. You might be asking yourself, that's what you've joined the webinar for, but we just wanted to gauge your views as we start this session. So please do select one of those. And perhaps that's slightly depressing, fall further in 2021 and stabilize in 2022. I think the hope for bounce back, only 2% of you out there, maybe the wishful thinkers, but it does look, I suppose, that stabilizing through 2021 and recovery in 2022 is perhaps positive. With that, I will pass over to Mike to kick off the main session. Over to you, Mike.
That's great. Thanks very much, Phil, and hello, everyone. I'd like to start by talking through some of our methodology and how IBA approaches some of the value updates that we're making in the early part of this year. And then we will move on to explore some of those changes and explain exactly what we've been doing in terms of our value updates. So we have a pool of 6 ISTAT certified appraisers, of which 5 are senior, and those form part of our value forums that we use and form to discuss and review our values. We've done around 24 of those last year, so we tend to average sort of, every other week pretty much. We are gathering the elite sort of appraiser team amongst analysts, members of our asset management, remarketing services teams as well, take part in those forums to discuss the value data that we obtain and analyze in terms of forming our opinions. I wanted to point out that as much as gathering data points and analyzing those, actual transaction data is a very big part of what we do. Not every aircraft or asset trades within every review period. So where we don't have those comparable transaction data points, there are a number of other factors that we look at. So we may look at other trades of the same aircraft type for different vintages and interpolate between those. We'll also take into account operator fleet decisions if operators are moving away from certain aircraft types, which you'll certainly see has happened to some aircraft types in the subsequent slides that we'll go through. We look at the overall balance of market supply and demand. We'll look at advertised availability, and we'll also look at historical performance of assets in similar sort of market conditions and use proxies there. Where we have an idea of lease rate factors, we can also use lease rate data to infer value points as well. And as we're getting into more mature assets, looking more at sort of part out, end of life, we'll also look at the value of parts, components, including engines, to determine aircraft asset values. So that's some of the factors that we look at, and worth bearing in mind those points as we move through the slides, which we'll move to the next one, please. Okay, so we're going to start by going through the narrow body aircraft types, starting with the Airbus A320ceo. Important to note that we haven't made any changes to base values for this aircraft type, although we have seen softening in market values over the recent review period. We'll see different performance depending on the different family members in the CEO family. You'll see on the right-hand side of the screen, those are our market values and our market lease rates and the changes that we have made. These are not comparing just the most recent update, but this is kind of the through COVID change in those market values and market lease rates. So comparing January 2020 numbers, which is our pre-COVID numbers, to the current update that we've made. In the center of the screen, you can see the retirements and part outs of the family. Now you can see that 319 really has suffered worst. See that both in terms of the percentage changes that we've made to value, but also the numbers of retirements. We've seen quite a number of fleet exits. The storage level there is quite high, as it is across the 320 family. So sort of a justification there through the data that we're seeing for some of the reductions on the A319. Comparatively speaking, the 321 is performing better. The utilization is better, lower storage. We've made less of an adjustment there. You also have the option of a freight conversion. Obviously, we've seen strong demand for freighters given the COVID environment that we're in, and so that is a benefit for the 321 aircraft. So we expect a bright future for the aircraft there. The 320ceo, we are still seeing sort of high storage levels there, and we have had to make some fairly significant downgrades on that aircraft in terms of values and lease rates, as you'll see on the right-hand side of the screen. We are, however, seeing in some of the extensions, lease extensions that are being negotiated and that have closed and been extended, some fairly positive trends, obviously lower than we would have seen pre-COVID, but still holding up fairly well. However, in terms of secondary placements and aircraft transitioning to new leases, we have seen severe pressure on those lease rates, and still many cases those starting with a low sort of entry rate or power by the hour type structure on some of those new leases. So that's still very much prevalent in the market. In terms of our forward outlook, we are cautious. We think there is potential for further declines as we see some of the restructurings over the rest of the year, expecting to see more aircraft coming out into the market, particularly as more NEO aircraft are delivered. With that, I'm going to pass you over to Stu for the next slide.
Thanks, Mike. Well, as part of our review, we've also chosen to present the historical and forecast value profiles for 7 key types that Mike covers where significant value changes have occurred since his last year. I present these after Mike's covered the drivers for that type. Now, all the data is taken directly from Insight IQ Trends, which is now being redeveloped from IBA IQ over to the new platform. Now, just some basic intro. All the slides present in an identical way with multiple vintages displayed and distinguished by the colourful market value lines. Black lines are base values, grey are soft, and the dotted line provides the park stored percentage over time. And the projection starts from build year, illustrates the track market value over time, and recorded at 6 monthly intervals. Now, just a point on base value forecasts, they're generally quite rare. Outside of minor specification or inflationary effects, they are based on long-term assumptions. However, when market values do deviate beyond soft, which is crossing that grey line, or we envision the aircraft program has taken a significant shift to make us rethink key assumptions, then a base value change is more likely to occur. Soft values themselves are statistically determined from historical trading data and account for around 90% of observed trades. The extreme fire sale trades would be part of that additional 1% we cover under distress values, which we haven't presented. But enough of that intro. I won't repeat that part, but all the other 6 other charts after this follow that same view. Now, on the A320ceo specifically, I mean, a highly liquid, adaptable aircraft, wide customer base. Lots of trades, although we have seen some poor quality aircraft trying to push value down harder. So there is quite a variance in some appraiser opinions. It is important to consider these charts assume normal ISTAT definition. So being wary of 15-year-old aircraft with poor engines and how that pulls that down. Now, certainly storage activity spiked in 2020, remains quite toppy at the moment. It is certainly feeling pressure from the NEO entrant as operators opt to refleet. Mid-build aircraft, so they're the ones I'm classing in the middle there in red, which are those turning from their first lease in particular, is where we have seen the greatest relative pressure, and the ones to watch from a base reassessment in the future as recovery could push beyond 2024. Certainly when you look at how the values have changed over the past, recoveries have generally tended to not necessarily be positive, but more tend to track sideways. Newer builds were already set with a much steeper depreciation curve to a straight last of the line effects, and that's something that's built into our methodology anyway. And we can expect that to continue, and there is quite a bit of headroom still for some of those aircraft there. Now, the aircraft itself has very much as a strong future recovery position, and they do offer opportunities at low pricing given the amount of value that effectively has been wiped out. But certainly, we're certainly looking at whether the freight program starts to penetrate to the market, and we could then start to see further demand there. Back to Mike on the next slide.
Thanks, Stu. So looking now at the younger generation of the Airbus narrow-body families, the 320neo and the A220. So less of a negative impact here. This is where we're expecting to see a stronger and more full recovery. There's less of a disconnect between market and base value, as we saw on the previous slide, as Stu showed us there. The utilization and active fleet is larger. It's positive relative to those older aircraft. Again, we've not made any changes to base. So we have seen a sort of flight towards quality, operators focusing more on their younger, more fuel efficient aircraft types through the pandemic. That has favored these aircraft types. Although comparatively better in terms of the storage position, it's still not obviously as good as you would see in a normal market conditions. You would not expect to see those levels of storage for young aircraft program, hence the disconnect there and the downgrades in terms of market values and lease rates, but still an area where we'd expect to see a faster recovery. Of the family, or the two aircraft families, the 320 and 220, I think we're positive on the 321 Neo. We see that as a good aircraft for the post-COVID recovery with flexibility, has range, it can substitute wide bodies as it has done with some A330s on some of those medium haul sectors, transatlantic routes in the case of the LR. So we feel that flexibility is going to be advantageous in the recovery phase post-COVID. That bodes well for recovery in values. Likewise, the A220, technologically advanced, very modern aircraft, been well utilized through the pandemic. We would note that the 220-100 somewhat marginalized compared to the 300. We've seen operators moving up into that 300, converting orders there compared to the 100, but both still technologically capable aircraft, and this is an area of the market that we're more positive in terms of the recovery. As you can see, you're looking at market values in the range of sort of 3 to 11% their declines depending on the model, and much milder than what we've seen in some of the older, more mature aircraft. If we can move on to the next slide, please. Then we have a historical view on that type, just because it's a relatively recent program. Now we're moving into the Boeing narrow bodies, the 737 NG, and once again, no changes to base value made here. And again, you'll see some variance between the family members, as you did see on the Airbus A320ceo family. So overall, lower levels of storage than the 320. I think the absence of the MAX has certainly played into that, and that's something to watch out carefully for as we go through this year and we start to see more MAXes deliver and we start to see more NGs being pushed out into the market. The 700 is really the aircraft which has taken the biggest hit here in terms of both values and lease rates. We have seen some very soft lease rates in the market recently there and have been observed. You can see in the center of the screen as well the numbers of retirements and part outs. That has increased for the 737-700. We'd perhaps expect that to continue. Less attractive for the freight conversion prospects as the 800, big fleet in Southwest. That's likely to come out as MAXes are delivered. So some cautions on the 700 there. The 800 remains popular for the freight conversion market, though, just mentioned, but we are expecting to see some softening as the MAX comes back. And we'd probably make the same comments as we made on the CEO in terms of the sort of secondary leasing. We have seen some extensions, reasonable rates there, but still that secondary passenger demand is very limited. So echoing really some of the comments on the CEO there. If we can go to the next slide, I think Stu's going to show us through some of those historical views again.
Yeah, thanks, Mike. So once again, high liquid adaptable aircraft with a wide customer base, and no shortage of trades for us to fall back on. Now, much like the 320ceo, the base has remained steady, but the bid builds, as you see, getting close, are on watch. We have seen a fairly large reassessment of the market values, and we've seen some big drops there. And certainly the pain could have been a lot worse if the MAX had been in full operation throughout the period. And certainly when we look at the conversion, we're getting to the point now where the conversions have gone beyond the 98s and looking much further up the vintage list towards the 2008s. It's with a feedstock price that's coming down there, and a large number that have been parked up, over 45% across all the vintages. Then certainly the pricing has been pulled down. Lease rates have been coming down, as Mike has said. 2024 is a reasonable market value, base value crossover point, except for those mid builds where they currently are. So we would expect to see that if there is any assessment of base, it's going to be for those middle ones in there at the next round. I mean, freight conversion does offer a good opportunity for the type, but the market is sort of being supplied without final customers in some cases. So we are seeing a push from many, certainly the lessors, who are converting large numbers of aircraft, taking those slots without necessarily a follow-on operator in place. And certainly, if we took that to its logical conclusion, then we could end up having an oversupply in that market if that market is yet ready to absorb those aircraft. Already the lease rates from those types of aircraft have dropped from where they were the prior year. So we've seen a 10% drop in the lease rates for freight aircraft, where the estimations were at the back end of 2019 versus the back end of 2020. But generally the market feels comfortable with the type. Operators certainly feel comfortable with it. But now the MAX is heading back into operation, people will be looking for a bargain. Back to you, Mike.
Thanks, Stu. Speaking of the MAX, that's the aircraft we're going to look at next. So we haven't made any changes to base value here. None of the narrow body types really that we have. We're seeing the return to service, albeit somewhat slowly. We've shown the active fleet in the middle of the screen there. So you can see American Airlines, GOL, Air Canada, Copa, and Aeromexico, the current active operators of the type. No, EASA has recertified, but we've not seen aircraft returning to service just yet with the European operators. Perhaps some of the conditions in Europe at the moment playing into that. Our current value opinions, they are slightly softer for the MAX compared with the Neo. That's based on some of the data points that we've seen before and through the COVID period. So we are seeing a comparative softness there, and the changes that we've made through COVID are a little bit steeper as a result. And likewise, similar picture to the lease rates. The MAX 8 remains by far and away the strongest seller, the 9 somewhat marginalized, and we've seen the MAX 10, the largest variant, which is the would-be competitor to the 321. We've seen that pushed back 2 years now. So we do expect that sort of size category to lose some further share to the 321. We are starting to hear some sounds around potentially new development aircraft in that space. So we'll have to watch that closely in terms of the MAX 10 or potential replacement to see what comes over out from Boeing in the coming months. In terms of the value performance of the existing aircraft and the order book, one area we are watching closely, or will be, is the impacts of discounts on recent orders as those manifest. How will we see that play into some of the sale leaseback pricing in the market over this year, and also how customer compensation for some of those delays, how that manifests into some of the pricing as well, and whether we see that applying further pressure to the numbers that we've displayed on the screen here. So certainly plenty to watch as we see those deliveries building. You can go to the next slide, please. So we'll look at the wide bodies now. We're starting just looking at the new generation across Airbus and Boeing product lines. Again, no base value changes here. We are seeing this as an area where we would expect these to recover more fully and quicker than some of the mature wide bodies, although there is some potential for further softening given the impacts on the long haul markets, the business travel, the international travel. This is the general wide body markets where we've seen some of the biggest impacts. So, and we are seeing some operators of these aircraft types in difficulty, in some restructurings. For example, we expect to see some 787s coming out into the market, and we know Norwegian aircraft are coming out there. So there is some potential for further softening, but at present, this is the least affected tranche of the wide body market, let's say. So in terms of those aircraft types that we're looking at on the screen, really the 350-900 and the 787-9 are kind of the core types, the more popular types. We expect to see a lot of operators building their post-COVID fleet plans around those aircraft, around that sort of mid-sized space. The VLA, or very large aircraft side of the market, has suffered, and we expect there will still be pain in that market over the sort of coming near to sort of medium term. We've seen the 777X pushed back, and the difficulties with the 380, etc., well publicized. So that's kind of where we're seeing the strongest and expecting the quickest recovery, but there is some risk in the short term. So that's reflected in the value changes percentage and the current market values as of January on the screen there. We can move to the next slide. We start to look at some of the outgoing and more mature wide-body aircraft types, and this is where we have started to make base value adjustments. So the 777-300ER, we were already seeing some softening before COVID. We were seeing values and lease rates in decline, market values and market lease rates. The secondary operator base, secondary customer base that we were seeing taking certainly the leased aircraft was fairly narrow. That was limited primarily to sort of Russian market, Russian carriers in those sort of leisure ACMI carriers. So that was kind of an indication of where things were headed pre-COVID. With the advent of COVID, we've started to see more part outs, although we have seen the Praetor sort of temporary freight operations supporting some of the activity there and some of the utilization of the aircraft, and storage has been lower than some other types. Still, the sort of secondary passenger demand for that aircraft type is soft. You can see on the right-hand side of the chart there the current operators and their fleet statuses. So as you can see, some of those carriers are favoring the aircraft over aircraft like the A380. Emirates A380 fleet is heavily stored, as you'll see in a moment, but it's utilizing most of its 777-300ERs. You see a similar case for many of those carriers there. So again, showing that trend of operators, their wide body types they are operating is gauging down given the market conditions. You can see on the center of the screen the market value changes and base value changes. So on the market side, up to 25% cut through COVID, and on the base values, up to and around 18 to 20% across those vintages, with some of those midlife and older aircraft being the worst affected. And again, lease rates subsiding as well there. On a relative positive note, there is the conversion program underway with GCAS and IAI. We know that there are others in development, and we do expect the aircraft to be attractive there, although there'll obviously be a limit to the number of aircraft that will go through that process, but certainly that will support demand for engines, parts, over a longer period, which should help ease some of that pressure that we're seeing on the engine values at the moment. I'll pass you now over to Stu, who's going to show how some of those changes compared to historical context.
Yeah, thank you. Well, I mean, over the period of 2020, the 777-300ER managed to maintain a good level of service. Certainly has the belly to support that freight market with the rest of the passenger fleet down. But realistically, high volume, long range travel has been and remains in panic mode. It still ultimately remains a key flagship for many operators, and you mentioned about Emirates there, who will focus more on the 300ER than potentially the 380. But travel recovery is more likely to rely on other more efficient, slightly smaller twins in the long run. On the plus side, the 777X, as you mentioned, has been pushed out further, which will certainly help. It is an expensive aircraft to reconfigure, which is the concern and part of one of the drivers for just looking at the values of these aircraft. And lease rates, as Mike has mentioned as well, have been pressured over recent years, with many of those rates for aircraft in around the sort of 12 years and older really being crushed on shorter terms. The base value has been reset in reaction to values and lease rates that we've seen. Naturally, there are not as many naked trades for this type. There have been some part outs, as Mike has mentioned, but the commitment for the type over a slightly shorter period, because there is a replacement coming and movement towards other aircraft, is certainly driving a slight change in economic life. Lease rates and sale leaseback activity have been pretty active. There is plenty of activity going on for us to make judgments on. And you know what does certainly stop the drop going further is a conversion program does help to stabilize it. But then we are looking very carefully on the reliance of the reasonable feedstock price to make that process economical. You know, so whereas what would be the ideal entry point for this clearly is as young as possible for as cheap as possible. And no surprising really that lessors are looking at those aircraft as they're coming off their first leases, rather than going through an expensive configuration, putting through a conversion instead, and then getting a much longer life out of them. So when we're looking at this and we then look at, say, the BDSF profile, which we're working on, then you will see a much more different profile as the aircraft utilization changes. But back to you, Mike.
Thanks, Stu. It's another wide-body aircraft type that we've made some base value adjustments to, the Airbus A330 CO family. That goes for both the 200 and 300 models. So we have seen the values and lease rates soften. Before COVID, we were already seeing that downward trajectory. So with the advent of COVID, additional supply coming to the market, high levels of storage, as you can see from the lower central chart there, and less than half of the A330-200 fleet currently active. So it has been a big victim of the COVID environment there. Even before COVID, we were seeing many operators that failed actually had 330 fleets. So you can see a list there: Avianca Brazil, Thomas Cook. See the list goes on. So in some ways, a victim of its own success. I mean, it's been a very popular aircraft, very large fleet and geographical representation. I think when we saw earlier delays to the 787 program, we were seeing operators taking on more 330s, taking on leased aircraft, some of those on some shorter terms. I think as we've seen those aircraft coming back in larger numbers in recent years, that has certainly added to the oversupply. And now with the impact on the longer haul markets that COVID has brought to us, that has further pressured the market for these aircraft type. Another factor to consider is that kind of plays into the base value changes and the longer term performance is that some of those newer generation aircraft types that we've looked at, the 787s, 350s, are available to a range of credits, some perhaps lower quality credits than perhaps would have been expected before. So where those operators are taking on younger, newer generation aircraft, that somewhat squeezes the potential for secondary placements of aircraft like the Airbus A330. We are still seeing replacement opportunities in the market with startup carriers. There are obviously options for the passenger to freight conversion program. So we've certainly seen interest around that increasing through the COVID period. But we've also seen the number of retirements and part outs increase and redeliveries, as you see on the chart on the right hand side of the screen there. So really we're seeing pressure on lease rates, even for those sort of perhaps lower credits for the startups where we are seeing demand. It's difficult to get lease rates really up above 200,000, even for the relatively young aircraft there. So in terms of the changes that we've made through COVID, market and base affected, and market values up to sort of 25-28% depending on variant, as you can see in the upper portion of the screen there. And then the base values are up to around a 20% decline. I'll pass you now over to Stu. I think it's going to show us the 300 and how that looks in a historical context.
Yeah, thank you, Mike. Yeah, one thing for the 300, well, for 330 in general, this is not the first time we've adjusted base for this aircraft. We adjusted it back we had some pretty significant changes over the last couple of years as we've seen the aircraft values and market decline. There have been a large number of six-year-old aircraft that have come onto the market, which naturally have pushed pressure on there. So ex-Singaporean aircraft, which certainly have pulled down lease rates for the type, which then values followed very soon again. So plenty of trading activity across all the different vintages, and you know, we cover a wide area here with sort of a 20-year range. And if I go back to sort of you know, around the sort of 2006, 2007, 2008 period, when we're looking at those 1998s, we actually started to see, you know, it's the one time where we have seen positive changes, and that's where we started to see a positive base reassessment. So it does also happen on the way the other way around, because at that particular time, that was when the A350 first time round was launched, and we were looking at that as being the time when the 330 market would be long term affected. But of course, we then started to see that whole program shifted, and it had a positive boost for a much longer period. So it's had a long life for a wide body program. It has become the backbone of the industry on the wide body front, has a very, very wide customer base. But unfortunately, during this particular pandemic, its mission profile doesn't lend itself well to the crisis. You know, it's a lower volume of freight, say, compared to the 777 for freighter access. It's a high density mover, so you know, used very much within a sort of a intra-Asian backbone for this particular aircraft type. But of course, the amount traveling has been decimated. So clearly, the demand for that has dropped away, and then other aircraft types then start to take over in that line. There is a refleet process for this aircraft as well. There's lots of competition from various different types in this market. So naturally, we're starting to see that the market will start to shift the pricing down to a point which concertinas the values to a smaller area. Now, feedstock, I mean, the values we got on here assume the aircraft remain in passenger configuration. Feedstock pricing is lower. So what we would expect to see that even very young aircraft, and we are starting to see aircraft as only as old as 8 years old being targeted for freight conversion, which is something you would not normally expect to see. You would certainly be considering another lease on top of that before that was considered. Consequently, the values of those aircraft have been brought down to those feedstock pricing, if that's what you're considering. So there's no value in the interior. There's no value, basically ripping everything out, you know, the lowest common denominator, which is pulling those feedstocks way down towards 20 million and under for young aircraft. So talking about aircraft on there which are well north of that in terms of the feedstock price, then they would be totally pulled down from that. But looking at it from a pure passenger point of view, the values have been tracking just about soft, which has then been gradually pulling that down, and consequently the economic life has been brought forward. Yeah, back to you, Mike.
Thank you, Steve. So I think this is the last of the wide bodies, and perhaps the one that's been the most severely impacted from a value perspective. The market and COVID really has not been kind to the A380. We've seen increasing number of retirements, increasingly negative outlook. We've seen operators regularly announcing move away from the aircraft type and retirements in terms of some, or in cases all of their fleet. So we've seen a very sharp rise in storage. If you look on the right hand side of the chart there, you can see the current airline operator list. There's only 3 operators who are actually flying the aircraft at the moment: Korean, Emirates, and China Southern. All of the others have stored their fleets in their entirety. We haven't seen really a secondary market develop for the aircraft. We did see an aircraft going into high fly as initial placement, but that aircraft has now been returned. So really the outlook from a value perspective and the secondary market potential is very weak. So that has caused us to really make a deep reassessment of both market values and base values. You can see they've more than halved the figures there in terms of the current market and the current base value opinions. Our lease rates equally heavily impacted, although really we haven't seen any secondary leases really developing for the aircraft, so somewhat theoretical there in terms of the lease rate side. But really this is probably the worst aircraft type in terms of a value and lease rate impact. And we are expecting to see more aircraft sadly coming out soon. We've recently heard the news of the tie restructuring, that the 380 does not figure on the team sheet for the aircraft there. So, 330s as well will be coming out further on into the supply. So not a great outlook for the 380. I think if we pass back to Stu, I think he has a slide there to show on this aircraft also.
Yeah. So yeah, as Mike said, the impacts of the crisis of the 380 has been significant. Practically the entire portfolio has been grounded. You know, coupled with the end of the production program, fuel burn scrutiny, the paradigm shift in how operators use it, traffic impact, etc. You know, it's seen how we've reassessed what and what we're predicting going forward is how this is going to play out. Consequently, when you're looking at the very younger of the aircraft, so looking at the 2017 builds in this particular case, the shift is substantial. We have seen impacts of this type before for things like the 74 freighter program, when just as it coincided with the global financial crisis, and then the fuel price rose, and we saw 74 ERFs going from you know, from 160 down to 40. It was a significant drop. And in this particular case, we are seeing a paradigm shift in terms of how that is, and that's having that effect. You know, no freighter program really, other than sort of localized and spot usage, and it's really not a part-out program out there to support it, because the rest of the aircraft fleet are not being utilized. The long-term prospects aren't particularly good. Not a lot of trades, of course, ready to go on, but market activity, disposal activity, and long-term prospects seem pretty clear. So back to Mike on the regionals, I believe.
Thanks very much, Stu. So yeah, looking at the turboprop aircraft first, we haven't made any base value changes here, although we have seen some oversupply, particularly on some of the worst affected types, and that has caused us to moderate our market values, and those have softened significantly through COVID. Despite some of those negative movements, though, we are positive for the recovery. We see the sort of fundamentals for the turboprop market as strong, given the missions and sort of purposes that they serve. So we do expect to see some recovery, that will take longer for some of the worst affected types. The -8 400 being the worst that we've displayed here. We've seen the failure of Flybe and more aircraft coming out of the market, and that has really softened values. We've seen some sort of distressed pressured transactions at below market value level, so that's kind of justification for the softening there. Equally, the ATR, we have seen a softening. We've not quite seen the levels of storage and availability as we have on the -8. You can see that particularly for the younger aircraft, the 600 series on the lower central chart. We've also seen the 600 recovering in terms of the numbers of flights quicker, partly because of some of those carriers divesting, but you can see that sort of switch around on the flights chart at the top center of the screen from our Insights IQ system. So we'd expect to see the ATR recovering quicker from the current market, but some softness in terms of values and lease rates on both of those families, really. I'll pass back to Stu, who's going to show us some of the historical data, just move a bit quicker so we can get through to some of those questions now.
Yeah, so I'm just on the 72-500. I mean, it's been around a long while, but it does dictate what goes on right up to the 600s. Amount of parked and stored, we saw quite a high rise in 2020, although it was already from a reasonably high base. There has been you know, softening of the turboprop market for a number of years, but not for the earliest, not for the oldest of those aircraft. They tend to be relatively resilient to pricing, but other ones have been coming down towards it. Interestingly enough, over its lifetime, the ATR has had a sort of an opposite effect with the regional jet market, and we tend to see the opposite swings with a lot of fuel pricing being directed in there. Over the last couple of years, since 2014, fuel pricing has been essentially down, and we have seen a parked level increase for turboprops there. I have a strong opinions on the turboprops. That I do think that they are pretty strong players in the market in terms of how they perform. They are, their levels of cost of operation and lend itself very well to regional missions, although specifically for certain regions of the world. So certainly we do feel that the market does have some strong resilience in there. We have seen pricing for the newest aircraft, the more expensive ones clearly coming down, and where we may see some base shift, but on the 767-600s. But ultimately, the market still has quite a long way to go. Back to you, Mike.
Thanks, Stu. So the last segment we're looking at here, the regional jet aircraft. We've selected a sample of some of the existing sort of midlife generation aircraft in terms of the Embraer E-Jets and CRJ family aircraft. We have seen some high storage levels here for some of the models, particularly the E190, as you can see there, and values have softened through the COVID-19 pandemic. That's certain. You can see on the right-hand side of the screen there some of the movement, up to 20% for some of those models. Despite the high storage for the 190, we are aware of placements that are pending. So perhaps the storage level, you have to bear that in mind when viewing the raw figures there. We know that there are aircraft waiting to go into Breeze in the US, so we do see demand. We see demand going into the likes of Alliance in Australia as well. We've seen a couple of portfolios of aircraft moving there, although some of the pricing and the transaction levels are perhaps lower than market, given the nature of those transactions and the bulk nature of some of those deals. It's still encouraging to see some movements and some demand there. In terms of the smaller variants that tend to feed the US regional markets, the 175 and the 170, those remain well utilized. Likewise, a lot of the CRJ fleet we would expect to stay in the US, but certainly the US carriers favoring those smaller Embraer products. Though where we are seeing demand, we're expecting to see those going in at lower rentals. So again, the regional markets, we're expecting to see a sooner recovery as those domestic short-haul markets come back. So a relative positive area in terms of our outlook on these aircraft types. So move to the next slide. I think Stu's going to look at the 190 and just how historical values have performed.
Okay, so on the 190, the base does remain on watch somewhat. We have seen some stress in the market values dropping down over the past year, and storage rates have been going up. Certainly, when you look in particular at the 190, and then in comparison to the replacement technology that's coming through it, it is a little bit more complex, and we have got more technology that's coming behind it. But certainly when it's reliant very heavily, obviously, on the US markets and seeing how those react, there is going to be a considerable refleet at some point for the regional market because the age profiles are getting up there. They are tracking quite close to base, soft values at the moment, which does indicate that there could well be some reassessment in the near term. But we are starting to see the parking levels drop, and we do expect some level of recovery going forward. But base positions and where those market ones are currently ones where we're really taking a close view. Okay, back over to you, Mike, for the summary takeaway points.
Thanks, Steve. Thanks very much. So just to run through, we've seen market values declining from most of the aircraft types, as you will have noticed from the slides. Much fewer number of aircraft in terms of our base value adjustments, only a handful of types, and most of those are the older generation wide bodies, which is natural considering the impact on the long haul international and business markets, which have been the worst. In terms of the wide body general market, the newest generation A350s, 787s, where we're seeing the values hold up better, but we are expecting to see some supply increases. So watch that space. The latest generation narrow bodies, we're seeing those as resilient. The sale-leaseback market's very active on those types. We're expecting operators to retain and build fleets around those. So that's a more positive outlook for the recovery expectations. Some of those outgoing types, watching closely the older examples. We're still seeing pressure, and there's a bit of a cautious outlook as we see more new aircraft coming into the market. And likewise, we'll see the MAX pushing NGs out there, and expect to see some further softening. Regional jets, as we've shown, values have weakened. We are expecting a recovery there as those domestic and regional and short haul markets open up. Likewise, the turboprop markets, strong sort of fundamentals for demand there, but there is oversupply in the market, and it will take some time to clear that out. So you'll see some different performance depending on the aircraft type. With that, I'll pass over to Phil. I think there's another polling question.
Well, actually, we are running a bit behind, so I want to get on to questions. So we're actually going to skip the polling question. I hope not too many of you are disappointed on missing that polling question, but we can put it into a future deck. I should just say we've had quite a few questions coming in which are sort of freighter related, and we have got a freighter webinar coming up at the end of the month. I'll get back to you on the exact date. But one of those, we have had a question about whether our A320ceo, you know, we mentioned a lot there about the 737NG conversion program, but the asker of the question said the first A320ceo is in freighter conversion. So what are our assumptions for A320s to be converted in the future? Is that something you can answer here, Mike, or should we go back privately?
No, certainly. I'm happy to open up a discussion privately, but I think we have seen aircraft going into that program. I think if you look at the 320ceo family, it's going to be the 321 that's probably going to convert in the larger numbers in terms of what we're expecting. I think it's a good replacement for the 757 class, but that's not to say we won't see 320ceos. I think in terms of that narrow body market, narrow body conversion market, that sort of Boeing products are more established. Obviously, you have the predecessors in the classics there, so perhaps a natural transition for more customers there. But they're certainly expecting to see a pickup in the CEO conversions, especially given where some of those pricing for feedstock candidate aircraft are getting to.
Okay. We've had a few questions which I'm going to group into sort of the E in ESG. So, for example, should values of aircraft that are the latest generation with strong green credentials over those they're replacing have a value premium as ESG requirements for both airlines and investors become more important? So that's a general flavour of the question we've been getting there. And I'm just going to pick that up myself, just because I had mentioned earlier in this presentation that you will soon see the IBA carbon emission calculator as part of the Insight IQ, and we just recently published our update to our original report on the environmental aspects and the developments in that area. So please do visit the website to download that. I won't go into any deeper there, but I do think there could be some move. I think we've seen some governments pushing their airlines to make a move in terms of cutting emissions, which whether that actually impacts the value of older aircraft, I don't think we're going to see that have a drastic impact yet. And the new developments, Airbus announcing the sort of the E fleet from 2035, it's still long enough away that I don't think we're making any assumptions in a lower economic life of some of the new technology aircraft. So I'll assume that Mike and Stu agree with me on that. Mike, I want to come back to the question is, do we have enough evidence to make adjustments to twin aisle base values? Will single aisles suffer the same inevitable fate? And I suppose tied in with that is, numbers of transactions. How many do we need to see before we justify moving, market values up or down? I do ask that question. You could probably take 20 minutes to answer it, but I think, what do you feel about the evidence that we have to make the adjustments we're making?
Yeah, I'm very comfortable with the amount of evidence that we have for some of those changes, particularly on those wide body types. I wouldn't consider it a knee-jerk reaction. It's been a picture that's been building over time. You know, we have seen, as Stu mentioned, a lot of trades and data points on those types, particularly aircraft like the 330, the 777. Perhaps less so on the 380 because there have been fewer data points. You know, we haven't seen those aircraft transitioning in the secondary market, which perhaps points to the necessity to change from another angle. So, but certainly on those aircraft types, it's a picture that we've seen building over time, and definitely comfortable with the amount of data that we have to support those changes. I think, you know, you have to be comfortable that, you know, market values can return to those base levels if you're going to maintain base in those at the level that it is at. And I think clearly for some of those types that's not going to be the case. So yeah, very comfortable with the changes that we've made.
Yeah, I mean, it is one of those things that sometimes appraisers are criticised for attempting to lead the market rather than review what's happened. But I think it would be a little bit silly if we had our head in the sand. We know that our industry is kind of driven by GDP growth that drives air traffic, that drives, you know, the whole equation. And we know that the world has been in turmoil for almost a year now. So I think we have to look back historically about how some other similar aircraft types have fared. So I think it's only reasonable that we do make a very good estimate in some of those areas, given the breadth of the team at IBA. Stu, on the lease rates, do you expect these to recover, or will they remain, you know, lower than the 2019 levels? Will there be any recovery in these lease rates that we've seen?
Well, I suppose it depends on the time frame you're looking at. Do I think that they're going to recover in 2021? Essentially, no. From that perspective, as there's so much oversupply, but in over the medium term, when we're looking at the overall recovery, do we expect values to basically go right or slightly come up, the lease rates to stay where they are? There is still a huge amount of investment that's pouring into this market, which would generally stress that. Airlines which are feeling the pressure will naturally push for lower rentals anyway. And more investment that comes in will push values up and will generally keep lease rates down. So there are drivers in there which will keep those two points separated. But at the same time, there's going to come to a point where they just become uninvestable from that point of view. So and it will start from the top all the way down to the bottom. So I would say that lease rates, for some cases, where airlines are struggling, and they're putting aircraft on the sale leaseback. It depends on how many buyers are going in. If there's still a relatively small number of buyers going in, we may end up with sale leasebacks done at slightly stronger levels. But in terms of if we start seeing a much larger number of investors coming in and people competing on the same area, then we're going to end up in the same problem. But the overall number of leased aircraft is expected to rise as airlines point towards more leased aircraft. But at the same time, that will attract more into the space, thinking they're going to try and get hold of a bargain. So there is always two elements if you're in that sort of purchase and lease arrangement, with the price and the lease rate. But in terms of pure secondary leasing and placing those aircraft, for the time being, they're still going to be very low.
Yeah, actually, while I've got you, Stu, I'll stick with you on 777s and A330s. I mean, it does look pretty bleak, doesn't it? I mean, if you've got an aircraft coming off of a 12-year lease, or the bank's being faced with an airline saying, you know, we just can't pay you, they're not all going to be converted to freighters, are they? But you know, that seems to be that what everybody's thinking of at the moment is, oh, it's okay, I'll put it in a P2F conversion program. So, yeah,
well, I think two different arguments. One, on the 777, there are situations where the airline, that's one of those aircraft where the airline may consider not to go for a different aircraft type entirely, stay with that one and extend for a longer period of time. lower the rent, move it out, and until retirement effectively, so the aircraft never comes back. That would be the ideal scenario. On the 330, same again for those types of age groups up to the 12 years and over. Again, but the issue comes when you've got some of those young ones. If you've got aircraft which are 6 years or younger, then that's when you're going to be faced with a real dilemma in terms of the conversion, which it's realistically too young. So you are going to be effectively throwing away a large amount of potentially short-term value impact. So it's going to be a large effect there. But of course, if you're converting a young aircraft, the rest of its life is going to be low utilization. So you're going to end up with a situation where that aircraft will almost certainly last for 35 years more than say the 6 years has already been in progress, because the utilization will just drop off. So you'll end up with a much lower utilization, and there's an awful lot of A300s that still need to be replaced. And I think pretty much everyone's run out of 767s as well.
Yeah, I mean, I think looking back over the things that I've experienced in I suppose 45 years of aviation, is somebody will see an opportunity. Now, it may not be an opportunity that brings back every A330 or every 777, but if you look at the amount of metal you can get for your money these days, then there will be some that come back and there will be some converted, but probably not enough to soak up all of the availability. We have gone a couple of minutes over, but there's still a high number still attending, so I will get to another couple of questions. Back to you, Mike. Obviously, the long-awaited recertification of the MAX. We've seen some coming back into the flying programs. Will there be an impact on other midlife aircraft? Will they be replacing the older NGs and maybe some of the other Airbuses? I mean, how's that working out? Is it anything that we didn't expect here?
No, I certainly think that's something that we've been expecting for a little while. Certainly when we've been watching the utilization and the storage figures, the CO has been comparatively more, has featured more storage, higher levels of storage than the NG. And I think we've still seen quite although the neo production rate's been tempered and brought down to closer to 40, given the demand environment, that's still a fairly high production rate. So I think that has contributed to some of those higher storage levels, and I think we're going to see the same thing happening for the MAX and the NG program. Some of the operators have said that when they induct a MAX, it means an NG going into storage. So I think as we start to see that ramp up, we'll see the storage levels rise. I dare say we'll see some of the retirements rise. Obviously, the P2F programs will pick up some of that, but I certainly think through the rest of the year, there's potential to see some more softening on those NGs as a result of those MAX deliveries.
Okay, I've got a last one for Stu. It relates to sort of loan to values that may have been put in place through some of the financing. So I think this was specifically looking at maybe some of the Norwegian long haul fleet. So if the loan to values were based on base values, how relevant are base values in a condition where aircraft will be coming back? It's going to be a big mismatch, isn't there?
Yeah, because base is a long-term assumption. A market value is spot market, so there is going to be a big disconnect in terms of what those LTV, what the effect that's going to be. And I would say that when we're looking at where the soft values are, we have seen some people taking the view that inflated soft values is a more lower end position where to be considering is that sort of position, which again is a stable number, but it's obviously clearly lower. It's it's going to certainly cause some concern for some people. Really, the only way that loan to values based on base values can work is when you have got a reasonable period of time that you're actually working over. Any sort of short term, any period in history, if they see distress where the market has dropped, we have seen market values falling away from base. That's what you'd expect to see. And so if you're looking at disposal, then you have to consider the full amount in terms of, you know, how long it can take to market. But then that's the reason why the loan to values are a percentage below base anyway. So, you know, if they were, you know, if they're at 60 or 70%, that is usually comfortable within the soft value position. So in terms of lenders are concerned, then providing market values are tracking within that period, you know, within that sort of level that they've considered, then there shouldn't be a problem. The only question is whether or not how they decide to dispose of the aircraft. Is it a fire sale, auction, or is it a considered process of how those aircraft should be remarketed and put out there? So we can see a bad way of doing it, and we can see a good way, the real way of doing it. But realistically, that's where LTVs are. That's where they are. They're set that reason, aren't they? Effectively.
Okay. Yeah, well, we are coming up sort of 7 minutes past our scheduled end time, so I don't want to incur the wrath of everybody being late for their next calls. I will tie up there just to say the information you've seen today has been derived from our on-site platform, Insight IQ. You can request a demo either through the website or contact one of us, and we'll get back to you. So just for me to say thanks, Mike, thanks, Stu. Thanks to the marketing team of Mel, Lucy, Abby and Dom for organising us to get this production to you. So all that's left for me to say is goodbye.